Thank you very much for joining us this morning in discussing how to win the digital wealth management race. We thought it'd be an extremely relevant topic to pick up and discuss, especially when we saw the survey results that came out from Alpha FMC that showed that only 8% of wealth management firms are classed as being digital innovators, and only with 25% who are close behind. So I won't steal Ken's thunder, but we thought it was really relevant, and we wanted to arrange this session to start discussing it in a bit more detail. So today's session, Iress and Alpha FMC will explore what the digital utopia looks like for wealth managers, which major pitfalls and hindrances are there within the industry, and really where the big opportunities lie, and how those who plan and execute effectively are essentially going to be the winners of the race. So I will be your host today. I'm also joined by my colleague, Richard Ross, who is our digital products manager, and Ken Taylor, who is a director and head of wealth at Alpha FMC. So between them, they've got years of experience defining, designing, and deploying such digital strategies for some of the largest sort of organizations in the wealth management industry. So it should make for a good session, hopefully. So we've got around 45 minutes together this morning. So we will try to finish on time. We'll discuss the topics which are on screen at the moment. So how can you benchmark your digital maturity against your peers? What are the real opportunities to be gained by implementing a successful digital strategy? What the optimal model could look like, especially when there is no guidebook to leverage. Some of the common challenges that we've seen, and I guess most importantly, when you plan and execute that successful digital strategy, really, what is it that we can gain? I'm sure many of you have been involved in these Zoom webinars before, and you know what the Q&A function is, but please do use the Q&A function at the bottom of your screen. Ask us lots of questions, and if they're not too difficult, we'll address them at the end. I'm just kidding. We've got some time allocated at the end of the session, and we'll make sure we cover those off. So without further ado, Ken, I will pass on to yourself to tell us more about what the digital maturity could look like.
Thanks very much, Roxanne, and good morning, everybody. Great to be talking to you today. Personal introduction, my name's Ken Taylor. I work for Alpha. We're a management consultancy solely focused on the asset and wealth management industries. And we've been running a digital survey across our clients for the last 3 years. This is the third year that we've run it. There would be a good opportunity to share some of the results and some of the headlines and to focus on some of the themes that came out from this year's survey and comment on some of the trends. So this chart shows the question that we asked the participants around self-rating their own digital maturity. And I think it's probably worth just reflecting on the timing and the context of the survey. So we sent the questionnaires out in late March, little thinking that COVID and the impending pandemic were going to have such a large impact on the market and the way that firms were going to have to react over the next few months. So firms were filling this survey in throughout April and early May, and we processed the results in the summer and fed back to participants at the end of the summer. But it's very clear from the results that that the pandemic did have quite an impact in terms of the way that firms thought about their digital agenda and the priority they were giving it. So I think it's widely acknowledged that this sector is less digitally mature than other financial services sectors. And this survey shows that firms are starting to feel the customer pressure to make strides forward. One of the other stats out of the survey was that 75% of firms believe that digital was either their top priority as a business or a very high priority. So it's certainly right up there in terms of what boards are thinking about. Firms recognise themselves that they need to make more progress. And this chart shows where firms rank themselves. Interestingly, for the first time in 3 years, nobody ranked themselves right down at the bottom as living with the basics. We did actually, in the previous 2 years, have some firms that said they had made little or no progress at all with their digital agenda. But I think it's unsurprising you see firms clustered around the middle, either getting organised or starting to move up into that fast following category. What kind of conditions do they report to us? Yes, we've made some digital initiatives. They're either in very narrow silos, or we tried some stuff and it didn't really work, and we're trying to now work out how we spread it wider within the organisation. How do we get ourselves organised so that we can make it a permanent part of our feature, permanent part of our strategy moving forward? And how do we make sure that the initiatives that we take are successful? We see that if over the last 3 years, the firms have moved up the curve, but only slowly. Who are the innovators? Who rates themselves at the top of the curve? It's largely those firms that have got a more direct-to-consumer focus to their strategy, or they're part of a larger organisation that has got a more retail focus. So they're able to leverage the digital capability that comes with being part of a much larger organisation. Generally, those who've got a more institutional focus are lagging towards the bottom of the maturity curve. Interestingly, in terms of the priorities, when we asked firms if they were meeting their clients' expectations in terms of their digital offering, only 23% of firms believed that their clients were satisfied or largely satisfied with the digital offering. So it feels to us like there is a big momentum in this sector to continue to invest in digital capability, to continue to move up that maturity curve, and to focus on clients' needs and what's driving that demand. But firms say to us, and I think we'll reflect on this later on, it's difficult to know where to start and how to scale up once you've made some initial steps. So I'm going to hand over now to Roxanne, who's going to talk through some of the opportunities that firms see to start to invest and explore further digital innovation. Roxanne.
Fantastic. Thank you, Ken. Absolutely. So getting into what really the opportunities are here. So I'll first start by looking at the client opportunities. An interesting research that was actually published by EY showed that a third of clients have either switched wealth managers in the past 3 years, and another third are actually considering to switch in the next 3 years. So in this time, it's extremely difficult to get client loyalty and find clients which are sticky. So firms need to make sure that every interaction counts. And I promised myself I wouldn't talk about COVID, but especially in a time where it's harder to have that face-to-face interaction with our clients, we need to make sure that we've got the digital capabilities in place in order to be able to accommodate for that. So that smoother client journey and being able to provide your clients with flexibility for that communication, like I mentioned, will hopefully translate into them being more sticky, and for you to be able to get a larger share of the wallet as well. With that loyalty and customer satisfaction, of course, it goes without saying, is hopefully more client referrals. So 53% of clients at the moment are actually generated through referrals. So we need to make sure that not only are our clients loyal, happy, but also feel like that they can refer business to you as well. Moving on to the last box on the top row, how do we differentiate that service? So yes, there is that ideal avenue, which is client referrals, but how do we make sure that we're attracting new business? And what we found is actually a lot of firms are using that digital platform, their digital solutions, in order to be able to differentiate themselves from their competition. Especially with the great intergenerational transfer of wealth, which is looming, and millennials, which are more likely to be attracted to those digital capabilities rather than perhaps the white glove service that a lot of wealth managers are more used to or more comfortable in offering. So moving on into what the sort of operational efficiencies are here, and efficiencies that could be enjoyed when implementing a successful digital strategy. So let's start by client acquisition and onboarding. So the first touch point that that client has with your business, we need to make sure that that first impression is a positive one. However, the onboarding process can be extremely manual. It can be extremely onerous, having to go back and forth to the client to capture more data, or ask for evidence and documentation. But by being able to provide a platform to the client that allows them to self-serve some of that information to you, makes for a much smoother and quicker onboarding process as well. What I'll try and do here is bring some of this to life by using some statistics that we've actually captured by implementing solutions for some of our clients. And one of our clients found that it was actually 40% quicker to onboard clients using digital onboarding capabilities. And that means that the quicker the client is onboarded, the quicker you're advising on the assets. It goes without saying, it's quick, bringing money into the firm quicker as well. But it shouldn't really stop there at that initial client interaction, and we should start thinking about that whole sort of client life cycle, and then the client servicing piece as well. So when the data is captured, when the data is clean and maintained and updated, and you have everything you need to know about the client at your fingertips and 360-degree dashboards, it becomes a lot easier to then prepare for meetings and service that client as well. So again, going back to some client statistics, some of our clients found that it was 65% quicker to prepare for client meetings than it was before, when they had to go into multiple different systems to try and collate information and a single source of truth about that client. Again, picking up on that, the life cycle of the client within the organization, and moving on to the client servicing, the client administration piece as well. And when it comes to report generation, so by being able to put templates in place, which means that it's largely an automated process, and the advisor is only really coming in to add commentary or QAing that report, it means it's a lot quicker than to be able to not only produce that report, but then either be able to publish it to the client through online means, secure online means, or if they are more traditional organization, choosing to print and provide the client with that report as well. One of our clients was able to actually save around £800,000 in no longer printing reports, but actually generating them through templates and publishing them on an online portal for the clients to pick up. So, obviously there's great environmental benefits to that as well, but also huge cost savings to the organization as well. So with these efficiencies and cost savings, your profit margin will definitely feel the difference, and that's probably without saying. You'll be able to hopefully attract more clients, serve more clients, but also offer a more high quality service as well. And if that is the case, hopefully we'll be able to also offer solutions to a new target segment that hasn't been viable before. So I'm particularly kind of referring to a blended or digital only service capability as well. And I know Richard plans to go into a lot more detail. It's a very hot topic, and Richard is going to pick that up for us and go into a lot more detail around that digital only service proposition. Over to you, Richard.
Thanks, Roxanne. Just share my screen. Okay, hopefully everybody's seeing that. Okay, hi everyone. So my name is Richard Ross. I'm the digital product manager here at Iress, and as you can see, I'm going to talk to you today about the optimal digital model. So the dictionary definition of optimal is achieving the best possible in a particular situation. Now, we have many different types of businesses joining the call today. So we've got the very big to the smaller, medium-sized enterprises. So building then on what Ken was saying earlier about digital maturity, there's also the fact that each business is going to be at a different stage on the journey. So ranging from digital novices right up to those who might put themselves closer to the digital leader end of the scale. So in this session, I'm going to talk to you about how to approach working out what is optimal for your business, and then provide a few examples that illustrate what good could look like for you. So I would suggest that every business would probably define optimal as being a model that delivers benefits both for your clients in terms of improved customer experience, improved service levels, but also for their business. So by ensuring, just like Roxanne was saying, by ensuring they remain relevant to their clients, and reduce waste, and are able to maximize the revenue and profitability. So depending on what you feel are the biggest problems or biggest needs within your business, you may decide to prioritize one over the other in the short term, but ultimately you're going to be looking to maximize the benefits that can be achieved across all these areas. But unfortunately, there isn't a user guide or set of instructions to follow. So hopefully no one was expecting a big reveal in today's session. We need to think of a digital strategy as more of a cultural shift. So rather than a set of instructions that we can follow, unfortunately, it's not a case of do this and you get these outcomes. Now, clearly, there are a number of digital capabilities such as digital signatures, client portal, video meetings, etc., where it's not difficult to imagine what the expected outcomes and benefits would be. But the biggest factor that will influence how much benefit is realized from these technologies is going to be how they're implemented within your business. So if digital signatures aren't built into workflows and business processes, and they maybe rely solely on changing behaviors of advisors, you're likely to see much less adoption and less benefits realized. Similarly, rolling out a client portal without a clear plan for how you're going to use that to transform certain aspects of your client engagement strategy is going to mean that it may struggle to gain traction. And if it doesn't gain traction, you're not going to achieve those benefits that you were after when you started the journey. So my favorite definition of digital is the use of data and technology to transform a process. So moving a paper process online without fundamentally improving that process to me is not digital. So when implementing any digital strategy, the starting place for me is to identify the process that you're looking to transform. Before jumping into technology and letting that dictate your process, it's important to think holistically in terms of the outcomes you're looking for. So in particular, what are the optimal ways of working that are going to have the biggest impact? Who's going to be involved within your business in making a success of this? I certainly advocate making sure that they are involved from the outset and get them bought into the outcomes that you're after. And then what's the end-to-end customer experience you're looking for? What can you launch with and then build upon later? I think when you've considered those, then you can start to think about, the most appropriate tools or technologies to do the job. Are these integrated with your core technology? Or are they standalone? And again, how will that impact the optimal ways of working? What are your data requirements? What do you need to have in place in order to make it a success? How are you going to measure the impact? I think this last point is critical, because you can't learn and improve without the data, and you're going to struggle to get further investment if you can't demonstrate the impact. So whatever you do, make sure you can measure the impact. But fundamentally, a good digital strategy is about laying foundational capabilities that you can continue to iterate and build upon. Unfortunately, there's no real end state here, because it's in terms of what a digital model looks like, because it's about implementing a culture of continuous improvement, making a shift within your organization to use data to make better and faster decisions. So let's try and bring that to life a little bit in terms of how that could be applied in the financial advice market. So I think a key objective that many businesses in our industry will have been striving for when setting out on a digital strategy is making the delivery of advice more scalable. So if we look at this picture showing the spectrum of advice, most traditional businesses operate on the right-hand side, providing full holistic advice. And then many businesses will have created new channels with varying degrees of success. And these are aimed at directing certain clients into lower cost advice channels. Now, these companies will have invested a lot of their digital strategy thinking into this particular initiative in the hope of seeing those benefits. But initiatives like this can be very big, and undoubtedly they could deliver, should deliver big returns if successful. However, the lead time before you know if you will be successful and what will be successful is going to be quite lengthy and more expensive than if you perhaps tackled more isolated and discrete problems within your business. So the other perspective I want to throw in here is the servicing proposition. So when we look at the tasks that need to be undertaken for any clients in any of your advice channels, there's going to be a lot of those that are time-consuming and repetitive tasks. So possibly carried out by individuals who could and should be generating or doing more value-generating activities. So how many of these sort of manual but crucial jobs apply across all or many of your advice channels? When you digitize these, they'll benefit many clients. And then if you pick your battles within this space and make incremental changes, to some sort of future vision, you're going to deliver value more quickly. You're going to learn as you go and learn sooner, and then be better placed to move on to the next battle. But undoubtedly, the optimal digital model is when you've got front office, back office, CRM systems working together to drive automation and benefits for everyone. So by using workflows, reusing data between these systems, you can ensure that there's no break or limited sort of breaks in that chain. Now, this may be something, again, that you can't achieve right from the outset, but it should be in your plans and thoughts in terms of where you're trying to get to. So if we look at an example, so on this diagram, I've illustrated an end-to-end digital onboarding journey for a new advice client. And what this shows is a series of steps involving different systems, different actors that are connected and being orchestrated by workflows in the CRM. So the technology has essentially automated the repetitive steps, reducing overheads, but also ensuring consistent outcomes. And then the advisor and the admin staff are then looking after the high value touch points with your client. And then your client also has a fully digital and hopefully frictionless experience. Now, for many businesses who again maybe put themselves in the digital novice space or have limited resources, to implement an end-to-end solution like this, might be a bit too much to take on, but you should be able to see here a series of incremental steps that you would continuously move you towards that end state. So for example, many businesses still rely on paper fact finds, so offering your clients a digital option, getting this data entered in straight into client record provides an improved customer experience, as well as reducing overheads for your business. And then on top of this, hopefully all businesses are already using remote meetings from this year, but you can go a step further and start to build this in automatically into some of your workflows. Just like Roxanne said, if you've got have you got report templates, email letter templates that will automatically generate and be shared with your client via the portal when certain processes are complete. So each of these features will deliver incremental business benefits and can be used in other journeys as well. But they all have different technology, data considerations, as well as ways of working, customer experience considerations. So by tackling one at a time and learning as you go, it's going to be more achievable and deliver benefits sooner, rather than sort of trying to deliver that full end-to-end solution from the outset. So I think Ken's going to expand on some of these points further when he talks about planning your digital strategy. But I hope that was useful, and so I'm going to hand over to Ken, and if there's any questions, I'll be happy to pick those up in the Q&A at the end. Thank you very much.
Thanks, Richard. I just want to move on a slide. So yeah, all sounds great, but yeah, as we all know, the road to success for digital initiatives often is not smooth. And one of the areas of our survey that often we spend quite a lot of time discussing with clients when we do the feedback sessions are the challenges that they face in moving forward some of their digital initiatives. As Richard said, digital initiatives can have quite a wide impact on the operating model. So not just what the client or advisor sees on their desktop, but all the way back into the core administration platforms. And over the last 3 years, we've run the survey, 3 big themes emerge as the big challenges and barriers that firms face in terms of trying to progress their digital agendas. The top one, number one there, legacy technology, I guess is the one we spend most of our time talking about with clients. And I think this is a legacy of underinvestment over a long period of time from clients in their kind of core platforms that they operate on. But also that many of the core vendors around the market have not kept pace with some of the core digital initiatives that are going on. So clients have appetite to move forward, but find that their core platform doesn't really support some of the capabilities that they want to promote out to clients. A lot of clients have self-built applications, routines, Excel, to go around the edge of their core platforms, which either means it's difficult to upgrade, or actually they rely a lot on their own technology that they've built, or own manual processes to keep their end-to-end processes going. Interestingly, over the 3 years, there's been a definite shift that, whereas when we first ran the survey, a lot of clients said that legacy technology was the prime reason why they had failed to move forward as much as they would have liked. The leaders in the industry have now managed to find ways to work around some of their core platforms and don't see it as a bigger barrier as they previously have done. So it's interesting to see that it's not a complete a dead end, that you've got to replace your core platform before you can take any digital initiatives at all. And the leading firms have seen that it's not insurmountable. The second theme is about the culture around the business. We often find that firms will say to us, well, our board get it. They know that digital is a big priority. They want to move it forward. And the teams on the ground say, look, if only we could make better use of more modern technology, our jobs would be a lot easier, we could move things forward. And somehow the initiatives seem to get stuck in the middle of organizations. It's either not priority, or there are other things that are high on the executive or management agenda. So really starting to make sure that a firm has a joined up approach and a consensus around the priorities and the way that it's going to move the agenda forward, we see as very, very important in making sure that you get traction and you don't just end up with a few digital initiatives in silos run by people who are enthusiastic about it, but no widespread buy-in across the business. We see many initiatives kind of stall because that buy-in isn't there. Also, there's the question of, does the firm have the right capabilities in the organization to be able to move the initiatives forwards, and the right knowledge to know what they need to be able to do. Generally in this sector, I think in terms of technology, it's got a pretty poor track record of buying and deploying technology in a streamlined way. So definitely a learning curve to come up. The final theme is definitively data, and making sure that firms feel confident about exposing the data that they hold around their organization out into the digital environment, particularly in front of clients. One of the more shocking statistics out of the survey was 80% of firms don't believe they've got a single version of the truth for some of their core data items. And this really starts to make taking core digital initiatives quite difficult. So attached to all the threats around cybersecurity, client identification, and making sure that you've got a secure environment to operate your digital capability, having good data governance and good data discipline is definitively one of the challenges that firms face up to. So where do you start and how do you go about this? Richard, do you want to move on the second to the slide about planning your digital strategy? I guess to Richard's point, you've got to be clear about what you're trying to achieve. Are you trying to improve the client experience, the number one driver of digital initiatives in our survey? Are you trying to streamline and improve processes, cut out unnecessary costs, or just address different customer segments? Being clear about what your priorities are will help you set that kind of roadmap for the future. So create a consensus around the pain points and that sense of urgency to try and fix them. Be clear about the business case and the benefits that you're going to get. That will ensure that you get longevity out of the initiatives you take. Describe where you're trying to get to and what the end goals are. Digital initiatives are a series of building blocks that from the very first rollout, you won't see the entire benefit. So being very clear on where you're trying to get to will help make sure that you create momentum and keep that momentum going. Our mantra around digital is think big, start small, scale fast. It's just to tackle each of those in sequence. So think big, have that strategic vision about where you're trying to get to. Undertake a health check, establish where your gaps are in your digital capability and the degree of agility in the firm. Can you stand up digital initiatives and keep on developing them and moving them forward? So pick the top 3 journeys, for example, that cause you the most pain or you can see the most benefit from. Who are the clients? Do we understand what their needs are? Have we written those personas, to use the digital agile terminology, so that we understand what we're trying to tackle? And move forward to providing a production version quickly. minimum viable product. Don't try and get everything right first time round. You'll look back in 12 months time and still not have achieved anything. So get into the discipline of moving things forward quickly. Pick small things, move them forward. But scale fast, learn from what works within your organization, build the capabilities, get that roadmap in place, and focus on iterative developments that keep on moving forward the initiatives you've taken. The short-term quick wins could be simple things. Interestingly, most amusing conversation we had in the feedback sessions that we ran out of the survey was the client that said to us, yep, we've had e-documents and digital signatures and secure digital document vaults for clients on our roadmap for 4 years, and it's never moved forward. But in March, we did it in 4 weeks. So priorities can change and organizations can move things forward very quickly. This year's taught us anything. Consensus, management focus can drive forward initiatives very, very quickly. So our mantra is, have we got the right capabilities within the firm? Our survey says most firms struggle. Do we need partners to work with? Again, our survey says very few wealth firms are reaching out and working with fintechs and partners, and yet they say they're struggling to move things forward. And be clear about where your priorities are and the benefits that you're going to get. Hopefully that roadmap is simple but helpful. I'm happy to take questions on any of the content that we've covered. Roxanne, back over to you.
Thanks for that, Ken. Do have a question. Oh, we've got a couple of questions coming in. Are you seeing more or less investment in digital as a result of COVID? So if it's okay with you guys, I'll pick this one up. I definitely say that with the clients that I'm working with, COVID had seen a big shift and a big focus on putting investment behind some of that digital strategy, especially when it comes to being able to provide clients with another means of communicating with the firm. So being able to offer more than just what used to be the face-to-face interaction, and being able to provide them with a secure messaging service for them to be able to chat to their advisors, for them to be able to upload documents through a secure mean, as well as the digital signature piece as well. So definitely we're seeing a big push and big investment in digital strategies. I know, Richard, you've been working at capturing some data for some of our clients. Maybe you could add to that a bit more.
Yeah, I mean, so no surprise from what Ken said. So we've seen a large adoption in sort of client portal. So one of my key responsibilities is the development of the client portal initiative within Iress. So I think over the 12 months we've seen a 6-fold increase in the sort of sessions that are being generated through client portal, and that's sort of growing. So 25% sort of month on month. So yeah, a lot of activity. There's still differences in terms of who's achieving success, and you can see the sort of capabilities that certain businesses have turned on, and sort of what's how actively those are being used. So as we've said many times, it's getting on a journey, but sort of maintaining some pace and sort of looking to what the next initiative, the next battle is that lies ahead. Hopefully you will have learned something, but by having started the journey at least.
Absolutely. And there's another question here. This, I guess, just to build on what we said. So maybe I'll pass this one over to you, Ken. What level of budgets are you seeing wealth management firms spending on digital at the moment, and what developments are they spending on? Can you elaborate on that for us a bit?
Yeah, and obviously, firms differ in size, and as I said earlier, there's firms that are part of larger organisations are able to leverage other corporate budgets. But we did ask the question in the survey, and about a third of firms said their digital spend was around between 10 and 20% of their operational budget was spent on digital initiatives. And about a quarter was then less than that, so in the 5 to 10% range. So you can see, somewhere around 10, 15% seems to be the kind of budget that is allocated towards digital initiatives currently. And that has definitely climbed in the last 3 years. And I think, because of the timing of the survey, I think firms were rating that they were spending more because of the need to upgrade their capabilities. The other question we asked was how many staff do you allocate to, how many FTEs are allocated towards digital programs. And again, the answer is largely in that sort of 10 to 20% range. So you see it's a pretty significant chunk that firms are now spending of both their resources and their budgets into digital initiatives. What are they spending it on? Improving the client experience is the number one focus, and pretty much every firm in the survey had that as their number one pick in terms of what they're trying to achieve with their digital budgets. Interestingly, over the last 3 years, automation and improving processes has climbed up the priority chart. It's now the second most ranked reason why firms are investing in digital. I think firms recognize that, the two are not mutually exclusive. You can improve client and advisor experience and get the benefits of automation, and the two work hand in hand. And we see more and more of that in terms of the priorities that firms have. Third priority is growing revenues, and I think that's about trying to reach different customer segments. Roxanne, you mentioned the wealth transfer going on, and how that will accelerate in future generations. And I think firms have got an eye on that and the next generation and how they're going to engage with them.
Absolutely, it's fantastic. Thanks for that, Ken. We have a question about whether the slides will be shared. The slides themselves won't be, but the recording of the session will be shared with the attendees. So we will make sure that gets sent over to you. I'll pick out, maybe just given time, just one more question here, which I think is quite interesting, and I'll pass it over to yourself, Richard. So tell us a little bit more about what developments are on the roadmap for the Iress client portal in the next year.
Okay. So yeah, this year, 2020, we've been laying a lot of those foundations that I probably spoke about, particularly in the fact find space. So what you will see next year is us building on top of that. So we launched with an onboarding fact find a few weeks ago, and we'll be layering on more capability on that, and then enabling that to be deployed in a review scenario. So recognize that most of businesses sort of servicing time is on those existing clients. Allowing firms to send out those reviews digitally and get clients sort of engaging that in a digital way, but and then how that triggers sort of follow-on workflows in Xplan. And that's going to be another theme, really, is that sort of end-to-end experience of how Client Portal and Xplan are working hand in hand. So it's not just sort of Client Portal developments that will deliver benefits to our customers. It's how Xplan and Client Portal are driving some of that automation, that improved experience. So for the Xplan users as well as the end clients. And then another theme would be in the space of sort of scaled advice scenarios. So thinking about some of those sort of simple advice scenarios, such as simple ISA savings journeys, retirement sort of health check, retirement planning sort of journeys. So helping customers who have these sort of needs that will sort of drop into their heads at various times in the year, and sort of help them get a picture of how much they maybe need to save to achieve a goal, whether it's a retirement goal or savings goal. Can self-serve on some of those, but still in a guided. I think we see guided advice being probably where most of our clients are. So allow those opportunities to be created for the financial advice business in a more scalable way, and then it's more of an implementation discussion and then sort of recommendation rather than a full holistic sort of service. So those are going to be key themes, certainly for the first half of next year.
Fantastic.
Okay.
So I think that is it for us. Thank you very much for joining us this morning. I hope the session was useful and interesting. We will share the recording after the session. So thank you very much.